Yo, what's up, man?
What's up, dude? How are you?
Good. Been a while. I feel like we haven't talked in a minute.
Yeah,
How was Expo?
that was amazing. We got
Yeah.
Johnny here. Let me pull Johnny on stage. All right. You in Miami?
No, I'm in Brooklyn. So Alvaro's the Miami guy. I'm the New York guy.
Oh yeah.
It's
Um,
it is raining and it is cold.
well,
It will be
LA,
nice soon.
LA is pretty good. I might head down to the pool after this.
My
But there's nothing like New York. All right, we got Johnny joining.
Doot, doot.
There we
How about
go.
now?
What's up, Johnny?
Hey, how's it going, guys?
Good to
Good,
see you,
good.
man.
Daniel, starting to get worried, man. This is like Jonny Price levels of lateness here.
Speaking of Johnny Price, I don't know if you saw the lively discussion in our Slack about how
I did
interesting it
not.
was your name, like like a guy named Johnny Price who does like fundraising stuff, like crowdfunding. That makes all
For some
and it's
reason, I multiple times in my life, people have like it's a recurring theme. People are, oh, Jonny Price, like what a cool name. Like you should be a winger for England, or you should be a fundraising. It's like I don't really get it. I don't. My name seems extremely boring to me.
That's so funny.
Daniel Sharp or James Reina seem like way cooler names from Jonny
Well,
Price's perspective.
I was typing something in that Slack channel because there's a phenomenon called nominative determinism where people like gravitate towards names towards
I
occupations that
think
have to
I
do with their
is
name.
that in like Malcolm Gladwell? Malcolm
Probably.
Gladwell wrote about that. Yeah.
Yeah, yeah. So like the example that I gave is that I have a climbing gym and the guy who owns my climbing gym, his name is
It's called
Cliff.
Jim. Oh.
It's not called
Well,
Jim
it
though.
could also be called Jim. Yeah.
Yeah.
Yeah. In Malcolm Gladwell's book, I can't remember which one, but he was talking about, I think there was like a couple of kids that were called Winner and Loser. So that's kind of
Wow.
a dark version of nominative determinism.
all right. Well, I guess James was born to be a king, a queen,
Well,
Queen,
Reina,
yes,
yeah,
a
Reina
Spanish
Queen.
queen.
So
queen, yeah,
either
queen.
get into drag or marry into the royal family.
Yeah.
I'm going to change my name to Moneybags Price
Yeah.
to really just like reinforce
James is
the
gonna
brand I'm trying to
James is gonna
convey.
change his first name to Yas.
Yeah, Yas Queen. That should be my drag name.
Yas Reina.
Yeah, that's fine. Daniel, before we start, I just wanted to like quickly get like a rundown of what's going to go down and how much talking I'm going to do, just because I haven't like really prepared anything. I feel like I'm
No, I
here
don't think
more
you
to.
need to. Oh yeah, so
Okay, good.
Johnny, and there are a few people watching us right now, but no one cares.
Oh,
Hey everybody. Behind the scenes, you're in the green room. So Johnny, if you can just you have your presentation, right? If you could do the screen share on your computer. And then mainly like I'll just jump in with some questions. And I mean, it'll be the first time I'm really looking through it with you. So I'll be jumping in and asking for some clarifications, and we'll take questions from the audience that I'll help moderate for you. So like probably let me pull the questions up from the Q&A.
Yeah, that'd be good. I'll be looking at my screen and
Yeah.
so I won't be able to see the Q&A. So yeah.
Yeah, I'll just jump in and then you'll know when to go to James for just, and if you want to, I think a cool thing is James, if he's going through anything and you're like really want to add the brand's perspective, you can jump in and do it. And then
Please do that, James. That will be way
yeah.
more interesting and kind of break it up and also be more valuable for people. So yeah, please do that. If I say something and either you want to double down or even more fun, if you want to be like, well, actually, Johnny, that wasn't my experience. So I would think about it a little bit differently. That would be really fun.
the
But
price
yeah,
is
Yeah.
please.
wrong.
The price is wrong. Yeah.
I'm
That'll be
happy
the
to because to be honest, after we closed with you guys, I threw it out into a few group chats, startup CPG being one of them, and I said if anybody wants to chat about crowdfunding, let me know. So I've had a lot of one-on-one combos with it, so I've gotten to talk about it a lot and learn like what people are asking, and hopefully I sent some referrals your way too. I think a lot of people got very interested because it was great for us, real like genuinely.
Yeah, that's awesome. And so, yeah, the run of show, like, so Daniel, you'll kind of kick things off, like a few minutes of intro, hand it over. I'll kind of run through the slides for 15 minutes or so, and then I'll transition into interviewing James about the Jibby experience on Wefunder. Yeah.
That's great. You'll feel it out. It'll be,
Yeah. And yeah, feel free to jump in, Daniel, if you want to kind of redirect or whatever.
I will.
And what's the kind of end time?
But I mean, just 1 hour max, basically.
Okay, got it.
So 3 my time.
I saw the
Jonny,
calendar invite was extended a little, so I wasn't sure about you.
Oh yeah, just to and more just for me.
Jonny, where are you? Every time I talk to you, you're in another country.
I'm in very boring. I'm back in home in Nashville right now.
Nice.
So yeah, I have been gallivanting around the world the last year or so.
Do you want to get your screen share going, Mr. Jonny?
Yeah, I can do. Let's see here.
Some people trickling in. What's up, everybody?
Can you see my? You can see my screen now, yeah?
I sure can.
Can you see the Zoom boxes in the corner of my screen, or just the PowerPoint slide?
Just the slide.
Perfect. Okay.
I like that. I like this image.
Yeah. Design is not my forte at all. Started my career with 6 years in management consulting and spent a lot of time writing PowerPoint slides. Thankfully, these days, spend basically 0 time writing PowerPoint slides, as you can tell by the aesthetic, lack of care in the following slides. Sorry about that.
I did that too. I did 3 years in it and could format a slide in 2 seconds. I'd have it all lined up, and
everything aligned, all the boxes
all.
aligned. What company?
Deloitte.
Which office?
I was out of DC, the McLean office. How about you?
So I was with a firm called Oliver Wyman in London, and then when I moved to San Francisco, I transferred to that San Francisco office. But so what do you think, Dan? You think management consulting is like helpful for a career in startups, or actively unhelpful?
Oh, hell yeah, it's helpful, man.
You think?
For sure, I feel like I can do anything. Like, I don't think I learned anything specific except for how to learn anything and have the confidence that it's probably like false bravado, but I'm like, yeah, you need me to be on the R&D team. Like, yeah, I can learn that. Like, give me a book and then I'll start doing it. Like, I think that's really helpful in the startup world because like most of the time someone is not there to tell you how to do your job. You just go like, I can figure this out. Like, I'll be resourceful, and then I have to get it done. And I have a lot of urgency to do it.
I found that a ton of the successful entrepreneurs that I know came first from consulting. Like, just gives you a really, really strong foundational background.
The downside of it for me is that like consulting is all about kind of research and analysis and like making PowerPoint slides and like dotting every I and crossing every T in a meeting room, which is like the complete antithesis of like action oriented, like just go of startups. So that's where for me, this is like a little bit more of a, kind of.
I feel like the ones who make the jump are inherently the ones who are like, why aren't we getting anything fucking done?
Yeah. This is going too slow.
Yeah. All right, guys, I'm going to kick us off here. Top of the hour. We've got a lot of people joining. This is a super interesting topic for me, the idea of community rounds. The reason I wanted to do this webinar now is because early VCs have left the building. They are not cutting checks for early stage brands. And so I think, everybody is looking to be scrappier now, whether that is looking for alternate sources like financing, loans. I think that, that can be one option, or angel investors. I think there are a lot of different options, and community rounds are one of them. And we've seen some companies do it successfully. And so we invited Jonny Price from Wefunder, as well as James Reina, who has recently done a Wefunder campaign, really just to give you guys the 101 on it. So a little bit behind the scenes, like what is it? What does it take for you to do it? And just help you guys get educated about it, and then probably make a better decision about whether this might be something that's right for you and your brand. So I am going to pass it to you, Jonny. And if you guys want to You can definitely put whatever you want in the chat. If you want to just say what's up and who your brand is or what you're thinking about or what you had for lunch, go for it. If you have questions you want to ask, it's best to put them in the Q&A, and then I'll curate them as we're going through. And just make sure if you want to send your chat to everybody that you select everyone. The default is just hosts and panelists, and then only we get to see your lovely comment. So, all right, Jonny, I'm going to pass it over to you if you want to maybe start with an intro.
Yeah, sure. Thanks for having me here, Daniel. James, thanks for joining as well. It's going to be awesome to hear your experience as a founder who's actually done one of these community rounds on Wefunder. Great to be speaking with all of you guys. Just to quickly personally introduce myself, English accent, from the UK originally. Grew up in London, moved to San Francisco, married an American girl, so that's why I'm now this side of the pond. Started my career in management consulting, as we were talking about earlier. Spent 6 years in a firm called Oliver Wyman. Then went to start a team doing crowdfunded microloans at a nonprofit called Kiva.org in San Francisco. So I started the US team of Kiva, ran that for 7 years, and then joined Wefunder in 2018. So I've been at Wefunder now for 6 years. And yeah, now last 13 years of my career, really focused on trying to get more capital flowing to entrepreneurs, especially through the medium of crowdfunding. But yeah, folks, today talking about Wefunder, I wanted to kind of get through these things. So firstly, quick overview on what the hell is a community round. Secondly, Wefunder's mission. Thirdly, which of you guys listening is it a good fit for? What are the pros and cons? Some kind of boring technical details. And then we'll interview James and hear from the horse's mouth on his experiences on Wefunder. So just to be kind of super high level, what is a community round? Normally when startups are raising capital, they are using what's called Regulation D. The two kind of main things of that Wefunder and community rounds change. Regulation D is limited to accredited investors only. So if you're raising capital, normally you guys probably know, oh, you're limited to raising from accredited investors. And then secondly, you're limited to privately soliciting investors. There is actually a version of Reg D where you can publicly promote the raise as well, 506C, but generally speaking, private solicitation.
And what is it? Can you remind us what's an accredited investor?
Yes, accredited investor is $200,000 of income or $300,000 of household income or $1 million of wealth, excluding your primary residence, your house. So another way of thinking about it, basically the richest 5-6% of the US population is accredited. And so, seamless segue, Wefunder uses regulation crowdfunding as opposed to Regulation D. With regulation crowdfunding, it changes both of those things. Firstly, now unaccredited investors can invest as well as accredited investors. About 50% of investment volume on Wefunder is from accredited investors still. So a lot of accredited investors investing through the platform. But now the 95% of the population that is not accredited, i.e. the vast majority of your customers, can now actually invest in your company. And the vast majority of your network, LinkedIn connections, friends and family, etc. And then secondly, with regulation crowdfunding, the SEC allow you to publicly promote the offering and run a marketing campaign around it. For me, this is a big part of like the why I'm excited about the future of what we're building at Wefunder. It's 2024. The idea that startups should only be able to raise capital from millionaires and B, only be able to privately kind of pitch the investment is extremely anachronistic. Daniel, James, do you know where this what show this is pulled from?
Monty Python.
Nope, close. Good guess. Anyone in England would know this. This is a show called Blackadder. Incredible TV show. My entire sense of humor is based on Blackadder. That might be a pretty bad advert for the show, but you guys should still go and watch it. It's awesome. So for me, like the best Wefunder community rounds are an awesome marketing campaign. Obviously, it's a way to raise capital, but you know, as well, maybe even more so. Like this is an incredible marketing campaign. Your most loyal customers, it's a chance to invite them to become owners and investors in the business. Can be alongside VCs and angel investors. It doesn't need to be an either or thing. I think that's a common misconception. Like We love it when there's like a VC leading the round, pricing the rounds, and then you're opening up an allocation to let your customers and community invest as well. But for us, it's a marketing campaign, a community engagement campaign. Go ahead.
So
Dan.
I think, yeah, one thing that I noticed then, not knowing a lot about crowdfunding, is it seems like this is not about raising money from your friends and family as much. Like it's more about your customers. Like we're gonna make this a marketing campaign to our customers and give them the chance to support the brand. Is that right?
I would say both. For me, I wrote a blog post with a picture of Britney Spears that maybe we can share as a follow-up. And the reason Britney Spears, she has a song where it's like all eyes on me or something like that. And for me, when you're running a community round, like go big, like push on all fronts, really like try to get the word out as much as possible so it goes as quickly as possible. You raise as much money as possible. And there's this real like, whoa, these guys everywhere has real kind of momentum. So
And also, Jonny, you told me one really good tip when we started, which was to think about concentric circles when you start to blast out your campaign, because momentum is really important for fundraising in general, but definitely for crowdfunding. And when you start to think about who's your like tightest concentric circle, your closest, maybe your team and your advisors, and then your friends, and then your customers, and then your friends and family, and then keep breaking out of that. That's really how we targeted and like sectioned off communications, and it just started expanding. Like it created the snowball effect naturally when we thought about concentric circles, but it was
like
everyone beyond customers too.
kind of like Amazon reviews. Like no one's gonna buy it unless you got some good momentum there. So start with people who can give that to you.
Yeah,
makes sense.
Yeah, love that. Thanks for chiming in with that, James. Yeah, totally agree. And so yeah, raise money for everyone, friends and family, angel investors. You know, like one of the nice things about Wefunder as well, like it lowers the minimum check size, right? I don't know what your minimum, James, was, but like you can set the minimum between $100 and $1,000 from Wefunder. So typically, if you're doing a Reg D round, you're taking checks of like 10K, 20K minimums. Well, on Wefunder, we have the kind of the platform and the infrastructure to allow you to lower the minimum check size. So then you can hoover up a bunch of smaller checks. And Daniel, it's not just early stage VCs, right? Like in this climate versus 2021 with stimmy checks and, you know, public stock portfolios to the moon, like it was a lot easier to raise larger checks from angels. Now they're maybe a little more reticent to write a 25K check into an early stage startup. Well, then maybe you can hoover up a bunch of 5K, 10K, even 1 or 2K checks and turn a bunch of no's into smaller checks. Yeah, but if you kind of compound a lot of those together, it can build momentum. We also have 2 million registered users on Wefunder, 300,000 people have made an investment through the platform, 30,000 of those are accredited. So there's a lot of people we'll put you in front of as well. One thing I try to set pretty conservative expectations around is like how much you expect to come from our investor base versus people that you bring. It really varies on the campaign. There's some like Y Combinator companies historically have pulled in 2/3 of the investment volume from Wefunder investors and 1/3 of people they've actually driven. For your typical CPG company, I would expect that ratio to be flipped, maybe 70-30, something like that. So if you guys are kind of bringing 70%. So if you want to raise 200K on Wefunder, you bring 140K from your friends and family, angels, customers, your marketing, and then 60K you might expect to come from Wefunder. It might come in above that, under that, but I think that's kind of a healthy kind of average expectation.
And then one question we got from Susan is, she has heard that VCs and larger institutions don't like to see crowdfunding on the cap table. Now, is that antiquated or is that true? What do you think?
I think it probably depends on the VC. I think there's one element of it which is antiquated. So it used to be that when I started at Wefunder in 2018, like if you'd raise like 200K from 200 people, average investment on Wefunder is $1,000. So if you raise 200K from 200 people, we put 200 people on your cap table. That was bad, but that changed in 2021. So in 2021, the SEC allowed for what's called SPVs, special purpose vehicles, to roll investors up to 1 line on your cap table. So in the last few years, and anyone raising on Wefunder, like it's now 1 line on the cap table. So that like solves but I think some VCs or lawyers are maybe still living in the past where they're not familiar with that. That's now solved. I think there's another question around kind of perception and like negative signal. And like, if you raise from the crowd, like, did that mean you couldn't raise from real investors? That's a much more kind of nuanced conversation. Like for me, that's to some extent it's like, well, beggars can't be choosers. And like to your point earlier, Daniel, if it's like hard to raise capital, you're looking for alternative options. That if you need to raise capital to grow your business, just like do that. If you are really worried about negative signal, and you are on the venture path, which obviously is not a fit for the vast majority of companies that are starting every year in America. But if you're on the venture path and you're concerned about signal, then what I normally recommend is to just have a VC lead the round. We would hope that any consumer-facing company, every round, even if it's a venture-led round, maybe especially if it's a venture-led round, open up an allocation to let your customers invest as part of it. Really great example of that, Mercury Bank. So they raised $120 million Series B in, I think it was 2021. And then after they closed the Series B, they opened up a $5 million extension to let their customers invest. They funded $5 million from 2,500 customers in less than 24 hours on Wefunder. Replit's another example, 80 million Series B, 5 million community allocation, 24 hours. And so if you are concerned about negative signal, then I would say we believe there's still value in letting your customers invest. It's going to supercharge their NPS. They're going to be loyal customers, brand ambassadors, etc. So just have them kind of follow a VC who's leading and pricing the round.
And I mean, yeah, I don't know. Honestly, I've never raised money, but it seems kind of wild that somebody would look down on us being able to raise money from our community. Like that for me, that would be a great sign.
Yeah.
And also,
I was
Exactly.
gonna say, I found that to be true. Like people were like excited that we were able to raise money from our community. And I haven't been now to the stage where we're like actually having serious VC conversations, but most of the ones that I stay friendly with are like extremely supportive or happy or impressed by that we were able to do this, like from bringing in actual customers and people who like love the product or the brand or the story so much that they're willing to like put their money behind it.
Yeah,
beyond just buying product.
I could see if you've like knocked on every door in town and then that's your last resort, like I could see them being like, well, because you guys were desperate. But like if I don't know a brand and they're just coming to me with this cool story and they're like, and by the way, we're scrappy and that's the valuation we wanted and we got it done with our fans and now we're coming to you, like that's an incredible story. So I feel like it's all about the context and the story that you're telling.
And the positioning. That's a really good point. The last point you made, Daniel. And the other thing I'll say here is that like at least good VCs, right, once we've taken care of the cap table issue, which we have, right, good VCs I think will invest in growth. If the company has a hockey stick growth chart and a huge TAM and an unbelievable team, like that is by far going to trump, okay, well, we raised 200 grand from 200 passionate customers like a year and a half ago. It's one SPV on the cap table. So yeah, good VCs hopefully are investing in growth. These are just a couple of examples. Was this you, James? Do you remember?
Yeah, that's a friend of mine actually.
I thought I took it from your page. So Kyle, alumni of Venture for America, Andrew Yang's nonprofit. Andrew Yang actually was the lead investor, if you know him, presidential candidate. He was the lead investor in this company, Umli, which is live on Wefunder right now. The other day, which is pretty cool. He had him on their podcast.
I gave him a lot of advice. He was asking me about launching him. That's so funny because I was also in Venture for America, which from Yang. So that's funny. That's how I know Kyle.
That's cool. I know Andrew from the Kiva days. He was running VFA. Cool. I was running Kiva US. Good dude.
Cool.
Yang gang, baby. Okay, enough politics. But yeah, so the comment here that Kyle mentioned, rooting for you both and believing you both, keep killing it, my friends, right? Or Ash, the products is converging across several categories and they're crushing with their sales and customer growth. These investor notes, we have a Slack channel at Wefunder. Every time someone invests, we see the investment come through in the investor notes. And reading these investor notes is for me like what Wefunder is all about, what community rounds are all about. It's like hundreds of people, customers, connections, supporters like coming together to invest in a founder they believe in, a company they believe in, sometimes a cause they care about, and hopefully add value and kind of be supportive along the way. And also hopefully if you build a big company, you exit in 5-7 years time, make a bunch of money for your investors, also make money for some of your earliest customers and supporters, as well as a bunch of millionaires and VCs. So yeah, you can raise up to $5 million per year through a community round. Average raise on Wefunder is $400K. Average investment is $1,000. So 400 people investing $1,000 each. Like I mentioned earlier, can be part of a larger round, an allocation for your customers alongside VCs. And there are competitors as well. So by all means, do the research. Obviously, Wefunder, you think are the coolest. We're certainly the biggest. So yeah, this is just an example of what our website looks like. I was going to maybe share my screen and go to the website, but I think that might be a little risky. So I'll just show some screenshots. This is our explore page, so you can see the different companies. We have different categories. This category is VC and notable angel backs. We have a consumer products category, or a kind of biotech category or whatever. And then once you click on Kelmix, then you come through here. They're raising right now. They've raised 1.1 million. This is actually their second raise with us. Beauty kind of hair care CPG company based in Chicago. And yeah, 1.1 million raised from 1,264 investors. If you go to wefunder.com/Kelmix and then you click on the What People Say tab, that's the tab where I pulled those investor quotes from previously. Again, you can see this is what it's all about. I can't scroll down on the screenshot, but down below you can see here price rounds. It talks about what the valuation of the company is, and then their minimum check size is $250. And yeah, very easy. Just plug in a number there, invest, create a Wefunder account, check out using a credit card, bank account, Apple Pay. It's pretty quick and easy. And that kind of leads me on to Wefunder's mission. So Wefunder is a public benefit corporation, not a C Corp. And so we're pretty mission driven. A big part of that mission is to get more capital flowing to founders like James and probably a lot of you guys. We just think more capital flowing to entrepreneurs to allow them to kind of chase their dreams and build their company is a good thing. And then secondly, kind of especially more capital flowing to underrepresented founders as well, if that's women or entrepreneurs of color, or geography is the other lens that I look at. It's like 77% of venture capital, I think, right now goes to 3 states, California, New York, and Massachusetts. So we hope if we have kind of a more democratic approach to angel investing, we can kind of get more capital flowing to 50 states throughout the country. And then on the investor side of the equation, the mission is to allow everyone to invest in startups they love, not just rich people. It seems, again, pretty anachronistic to me, certainly very un-American. I always think it's like slightly weird for the British guy to be lecturing Americans on what's un-American. But the idea that like only rich people can invest in like cool startups they love seems to be about the least American thing in the world. And then also kind of building stronger connections between investors and founders. Building community around startups is actually a question I'd love to ask James. Maybe actually we can just jump to it now, James, but like a big part of the vision for us is like, okay, if you have hundreds of people who are investing in your company here, all of them can in small ways help. Maybe we had one story of a company getting their products into Home Depot because the founder asked the Wefunder investors to like hit up Home Depot and try to get them on the shelves, and they made that happen, or like help with hiring or product feedback, or as you mentioned earlier, Daniel, like Google reviews, Amazon reviews. Any examples of that for you, James, with Jibby?
Two things. One of the like perks that we gave at a certain threshold of investment was that we would add people to our like R&D sort of taste testers. And so it was kind of like a win-win because people are excited to be taste testers, and it meant that we got a whole extra big batch of people who would be like not only willing but like excited to share feedback back to us as we were developing new products. So definitely that. And Amazon reviews, when we launched on Amazon, we just asked everybody, hey, can you grab our product, write us a 5-star review? And like that's a great way to launch a new product, by having the core audience.
Love that. Yeah. And the idea is if they are an investor, if they are financially incentivized by Jibby's success, then they're going to be more likely to write that review. Daniel?
Oh, I was going to wait, but I mean, I can see it too, of just like, it feels cool to say that you're an investor in something.
Right.
Like,
yeah.
This is true. You can't deny that. And I think like just giving your customers, I think, a chance to be able to say that to people, they're just always going to be rooting for you and always thinking of reasons to tell people about you, and like they do actually have a stake in the game. So it makes a lot of sense to me from that standpoint. And then I have one question, maybe like going to the next slide, which is, so one question that I have is about valuation. So these days, like, I said, hey, early VCs mainly have left the building. Angels, I think, like you were saying, are probably they're a little tougher, and I bet they're much stricter on valuation now. So let's say going back, I don't know, 3, 5, 7 years, whatever, like food tech heyday, you have an idea for a company, it's worth 5 million already, right? And you got like a little bit of traction, maybe an actual product. Whoa, we're at 10 million. Let's go. You can give away 10% of the company and get $1 million. Great. Like that's not going to happen these days, right? And you're seeing 2 million valuations, right? And so like, yeah, the amount that you have to give away to get some cash is going to be tough. So what do you, if you're raising money, what do you think you can defend for a valuation on a platform like this, where you're really talking to consumers and they're going to see all your data probably, and you got to really be out there defending it, versus also like these days going to angel investors or VCs and the valuation you can defend there?
Yeah, that's a really good question. It's again a little nuanced. A lot of this stuff is it like really depends. The answer is usually it depends, and it depends on kind of what situation you're in, etc. But so it's nuanced. What I normally say is like, I think one of the advantages for founders of raising capital through Wefunder is that there is going to be a little more leeway in valuation, right? Like a customer writing a $500 check is going to be less price sensitive on valuation than a VC writing a 500K check. So I think that is like, there's some element there to which that is true. I think you can easily get in trouble by pushing that logic too far. And if you're too far out of line with market, then sophisticated investors that know what they're doing, again, 50% of investment volume on Wefunder is from accredited investors, right? And if kind of legit angels that know what they're doing, who are going to write you a 25K check, are then not going to invest, or are only going to invest $1,000 versus $10,000 because you push the valuation too high, then you're just going to raise less money, and it's going to be harder to raise money. And when you try to get in front of investors on Wefunder as well, again, we'll put you in front of 30,000 accredited investors, right? And so again, if you're competitive, you're going to put yourself with a better shot of like, raising more money from our community. So what I normally recommend here is like, again, you want to try to line up investors at the start, right? As a private phase of Wefunder before you publicly launch. And so from those kind of angel investors that you're pitching, or folks that hopefully are going to write some larger checks to anchor the round at the start, in those conversations, try to zero in on, okay, what's the valuation where there's going to be demand from investors, and then kind of put those terms up on Wefunder. But I do think, like, I mean, right now, VC market is down, right? In 2021, VC valuations were too high, I would think. It's very fair to say. In 2023, 24, VC valuations are too low. They're going to bounce back. And so sometimes startups will use this as a bridge where, okay, I was talking to a founder earlier today where it's like, okay, let me raise a bridge round from my community right now. And hopefully, and then in 6 months' time, one, I'll have slightly, more kind of growth metrics to show. And then secondly, the VC market will have picked up again. Nothing to do with my company, it's just the market is inflated a little bit. So I'll be able to command a higher valuation in 6 months' time. So to some extent, I think that that can be a benefit to founders sometimes, but you should be careful about pushing it too far.
Okay, makes sense. And then my second question is, what's the deal with, like, you see everybody like, oh, their goal was only 50,000 and they've raised 8,000,000% of that and they're at 1 billion. Like, you always see like kind of a low goal
Yeah.
and then an absurd amount raised where you're like, oh, they're so successful, I have to invest also. What is the strategy and thinking there? Like, what do you tell companies about?
I think that we have a competitor called Republic. I think that's maybe a little bit more in their kind of UI. I don't think you'll see that on Wefunder, although now I don't have it in front of me, and now I'm suddenly worried that actually maybe we do have that. But so on Wefunder, we have a minimum goal and a maximum goal. So let's say you want to raise 500K, but you might set a minimum of 50K. And 50K is the minimum we allow on the platform. Most companies from Wefunder will go with a 50K minimum. So then the minimum is important for two reasons. One, as long as you pass your minimum, you can keep what you raise. So in that case, if you only raise 40K, campaign's a failure, 40K goes back to investors, you don't get anything. But as long as you pass 50K, if you want to, then you can close on the money and say, okay, well, we only raised 300K, but we passed the minimum, so we can keep what we raised. The other thing that's relevant with the minimum is, as soon as you pass your minimum, we can send you a rolling close. So let's say a month into the campaign, you've raised 200K. well, that's past the minimum, so we can send you the 200K, and then you keep raise another 300K, and then we send you the rest at the end of the campaign. So for the minimum will be kind of a lower goal. But I think the way we do the UI and Wefunder is like, in that particular instance, the goal will be like the 500K, and so it wouldn't be showing kind of 800% over goal. I agree that looks a little bit strange.
But there's also sometimes like tranches, like you'll have like an early bird goal,
Yeah.
right? And like an early bird goal might have a discounted val cap, and we did this, and that's to help incentivize sort of like that first
Yeah.
bucket of investors to like, you know, prime the pot and get the momentum rolling. So like we did that. So we had like first goal hit and then next goal at a higher valuation. And like this also gave moments for us to push
Yeah.
urgency. Like
Scarcity,
urgency and
yeah.
fundraising. Yeah, scarcity, urgency. And that's really, really important in fundraising of any kind, like even when you're
Totally
talking to like VC. So using goals as like a strategic part of fundraise was really important for us.
Yeah, I totally agree. That's a really good point. It actually makes me think of another kind of broader point as well, which is like, it ties back to the conversation on valuations earlier. I think a lot of this stuff, like one thing Wefunder is trying to do, I think this actually quite differentiates us from our competitors, is like we're trying to say, how does fundraising normally work? And let's basically replicate that. Just now everyone can invest and you can publicly promote. So for example, like if you would raise on a YC safe, if you were raising from angels and VCs, raise on a YC safe on Wefunder. If you would do a revenue share, you know, if you were raising through Reg D, then do a rev share on Wefunder. If your pre-money valuation would be, you know, 8 million in a Reg D, do something pretty close to that on Wefunder. And then to your point, James, on the psychology, right? Any fundraising round is like, you know, FOMO, scarcity, like, you know, psychology. And that's really, really important on Wefunder as well. We have this mechanism where you launch in private. And so everyone's always like, how quickly can you get me in front of the Wefunder investors? How quickly? It's like, that's actually the wrong way to think about it. You want to raise as much as you can, as James mentioned earlier, those inner concentric circles in private, so that then when you push the button with a public launch, you go live, you push it out on social media, email blast to your customers, you get in front of the Wefunder investor base, the more money you've raised there, the better. So if you're trying to raise, you know, $2 million, and when you go public on Wefunder is a 50K, that is a horrible, awful signal, right? So the more you've raised in that private phase, the stronger the signal. And again, it's like just a lot of these elements we want to try to replicate conventional fundraising, just like anyone can invest.
Okay,
Daniel?
so I think this will take us into this slide, but we got a few questions from people in the chat here around when should I raise and how will I know how much I should raise, and you know, should I have a certain kind of revenue before I do it?
Yeah. So, and yeah, this is probably relevant for this slide. I mean, I am a little biased, right? I work for Wefunder, so you should definitely talk to other people on this question. For me, like, I don't really understand why you would do a friends and family round and not do Wefunder. There are some pros and cons. Actually, I think on the next slide we get into that. But for me, this is like a great fit for a friends and family round because, you know, it's all in one place. It looks really neat. It's clear investment contracts. We take care of the payment processing. We roll it up to one SPV on your cap table. If you want to, you can also push it out into a larger base, get in front of the Wefunder investor base. So I think it's a pretty like efficient and kind of neat way to run a friends and family round for first money in. And then, you know, Substack are raising $5 million from 8,000 Substack users in 24 hours as part of, you know, as an extension to their Series B. So and obviously, if you're trying to raise $5 million in a day, then, you know, the best fit, really the only fit is going to be, okay, if you have a huge audience of passionate customers that love you, like Mercury, Replit, Substack levels, these guys will raise $5 million in a day on Wefunder. Basically, the bigger the audience, the more passionate the audience, you know, the more explosive it's going to be. But for me, a big part of it is like, how much are you trying to raise? And even if you're an earlier stage company, if you can hustle and you know how to kind of close and sell your company, like even if it's just like 100K, like Wefunder can be a useful platform to do that. And then the other thing is like, go ahead,
sorry,
James.
No, you say the last one. I'll go right after.
The last thing I was going to say is just going back to the point earlier, this can be part of a larger round as well, right? So maybe it's like Fathom Video, they raised $3 million on Wefunder, and this was obviously the case for James at Jibby. Fathom raised $3 million on Wefunder. It was like $2 million from VCs and then $1 million from their customers. So that's the other kind of, it doesn't need to be a standalone thing.
We did that also. I was going to talk about that. Like we took VC money, and we also had in tandem a community around Wefunder, and I think that was a really good way to do it for some of the reasons you mentioned before. Of like, if somebody doesn't want to hit our minimum check size but is still really interested, like maybe an angel investor who might want to put in like a few $1,000s rather than a 15K minimum, they'll do it. But I also wanted to answer, I think one of the questions was like, how do you know when is the right time to raise? And like Jonny, you answered it from like a very like a technical standpoint. You can do it when you're going to do a friends and family thing, but if we need a more like business perspective answer, I would definitely throw out that like when we first raised ever, we did it on the wrong perspective, and we were trying to raise to solve problems, and it's a really bad time and reason to raise. When we got a little bit older and smarter and did the Wefunder round, like we were raising to start scaling solutions. And just from like a vehicle thing aside, you should always raise not to solve problems, but to scale solutions. That's how you know it's time to raise.
Love that. Totally agree. Raise from a position of strength. This is the slide I mentioned on the pros and cons. So I'd be curious about like if James has kind of other stuff to add into this. For me, main pros, like this is an awesome marketing campaign. I've had many founders tell me this is the best marketing campaign I've ever run. Turn like hundreds, maybe even thousands of your customers into investors and owners, like that we believe will do good things for your growth. And therefore actually make it easier for you to raise from VCs and follow on rounds, because VCs like investing in growth. Can make it easier to raise capital because now you can raise from everyone, unaccredited as well as accredited investors. You can get in front of Wefunder investors. You can publicly promote the offering. You can hoover up a bunch of smaller checks. And this is a little bit more airy-fairy, but it's part of our like public benefit corporation thing. Like, wouldn't it be cool if when you make a bunch of money at IPO, like your earliest customers and supporters like are kind of making money with you? Like I tweeted the other day, I think it would have been cool if 5,000 Uber drivers had become millionaires at their IPO. I mean, Jason Calacanis is cool. This week in startups, but he already had a bunch of money. It would have been cool if like some of that had gone to the 5,000 drivers. And then on the downside, it can be an expensive way to raise money. So Wefunder charges 7.9% of the amount you raise. Startup CPG community members earn a discount to 6.9%. So you guys can buy Daniel beer for that one. But still, like 6.9% is like, not the cheapest capital out there. I think you can do like an SPV on AngelList for, a fraction of that. So, if you just want to raise from accredited investors, it's going to be cheaper. If you want to raise from unaccredited investors as well, I think Wefunder is the cheapest platform, certainly of any large platform. But still, it's like not the cheapest way of raising money. Sometimes what I recommend is like with what James did, if you have larger investors coming in, writing 50K checks, like definitely don't bring them into a Wefunder. Like we don't, earn 6.9% of 50K check that you guys were going to bring in anyway. If it's an investor that we bring, which occasionally happens, then I think we earn the fee on that one. But you definitely can do what James did, like larger investors bring outside of Wefunder, don't pay the fee. Okay, hoovering up a bunch of smaller checks, I think the fee makes sense on those. The other thing we haven't touched on yet, and this is important, like the SEC say that because retail investors are investing, we need more financial disclosures, public financial disclosures. And so you need to get financials done, GAAP financials for 2 years, or if you're a startup, then like going back to your incorporation date, or incorporated more recently than 2 years, going back to the incorporation date. And depending on how much you raise, so if you raise up to 124K, just self-reported financials. If you raise between 124K and 1.2 million, CPA reviewed financials, and then more than 1.2 million up to 5 million, you need CPA audited financials. So firstly, that's a cost. If you're raising more than 124K, you've got to pay a CPA to do a review or an audit. Review might come out at, between 1 and 7K in my experience, depending on the complexity of the financials. Audit might be kind of, 20, 25K. The other thing there is these financials are publicly filed with the SEC. So anyone can go to the SEC Edgar website, and it's also linked on the Wefunder page, and see your financials. So if you are really sensitive about, I do not want any retailers to see how much money I made in 2023, it's high level P&L. It's not like SKU level margins or anything like that. But if you're nervous about those financials being out in the public domain, that's usually a deal breaker. So you have to be kind of okay with at least like high level P&L, cash flow, balance sheet being kind of out there. And then lastly,
I haven't heard any brands worried about retailers seeing it. I've heard them be like, well, it doesn't look great. Like my financials, it's a kind of a tough year. That's like one of the reasons I want to do this. Like, that's why I don't want the financials to be out there. But like, that's going to happen no matter who you try to raise money from, right?
Exactly. If you're going to raise money, they're going to be digging deep in the due diligence into your financials, right? So, but yeah, maybe there's a timing of when you want to show that, but yeah, certainly that's a good thing. And with Reg D, right, it's not a public financial disclosure. Sure, your investors are going to dig through your data room, but like it's not publicly shared.
Yeah.
And then the other thing we kind of talked about this
Question I just
earlier.
wanted to touch on. So what I'm gathering from this is like people are asking, hey, could I launch from this pre-revenue like right away? And I think the takeaway that I'm getting from what you're saying is this isn't just some like bountiful stream of investors and you dip your fishing pole into and they're all going to come hopping. Like, you need to work. Like, this is a platform largely for you to raise from your customers, from your friends and family. Like, you're going to have to go out there, you're going to have to do campaigns. You might even promote it on social and like do paid ads and stuff. Now, you might also get some stuff from the Wefunder universe, but like primarily you should be planning for, how am I going to raise this money on this platform? Is that right?
100%. And I would say, like, the earlier you are, probably the harder it's going to be to persuade a bunch of strangers on Wefunder or social media to invest in you. And so the more it's going to have to come from you pitching investors, one by one, closing checks one by one. But yeah, I totally agree with what you just said. And look, if you're Substack, then you can send one email to millions of users and raise $5 million in a day. But that is the rare exception on Wefunder. For most folks, I think it can make fundraising a little bit easier. But yeah, it's fundraising usually is hard work. It's a grind. And yeah, if you don't have that like hockey stick, it's going to be harder. So just quickly spin through this. We mentioned earlier, 5 million per year. Just talked about this, the financial requirements. Before closing on the money, you need to file a Form C with the SEC. That's what's called Form C. We do that for you as part of our fee. And then 21 days after that, you can get your hands on the money. So actually, this is kind of an important point. So before you can close on the money, you need to file this Form C paperwork with the SEC. But you can actually start fundraising immediately. So if anyone wanted to go and start a Wefunder page, they could be live on Wefunder like in an hour's time and starting to share it with people. And then we kind of hold the reservations in an escrow account. And before we send you the money, you need to do the legal paperwork. Like I mentioned, minimum raise on Wefunder is 50K. And yeah, with Regulation Crowdfunding, you can promote it. And actually, this is an important point, kind of touched on this, but just to be explicit, you can raise on equity or debt actually on Wefunder. Vast majority of what we do is equity, but there are some debt raises as well. And then within equity, you can do a safe convertible note price round. On the loan side, you can do a loan with a fixed interest rate or a rev share. So whatever the investment structure that makes sense, we can accommodate on Wefunder. So, and yeah,
well, yeah, but just before we get to James's example, so just to like summarize how you might suggest someone does this, they're gearing up. Susan chimed in like, hey, let's say I have a 6 million valuation and I'm just going to try to do a raise and I want to do a crowdfunding raise. What I heard from you is like, hey, if you're going to include in that some bigger angels that you already know, over 50K type stuff, like go and get the checks from them. Don't do that through us because you don't need to pay the fee, 7% fee or whatever through us for checks that you already have. But then maybe to give the round some momentum, if you have like angel investors that are 10, 20, that kind of range, like maybe good to get them lined up ahead of time. And then, so when you actually launch the campaign that's public, that people are going to see, not for those checks that you already got, but the remainder amount that you're trying to raise, they're already in and they're hopping in on day one and they're giving you that good momentum, those smaller checks. And then you get to the point where you're going to then hit the next concentric circle, start raising with your customers, maybe. Does that sound about right?
Exactly right. And I think it would be great to turn over to James at this point, because if you look at the website right now, it says 462K there on the Wefunder campaign. And that was basically, I think, like something like 360K from, accredited investors. And it sounds like a VC as part of the round. And then like basically 100K from customers and the broader community. And so James is a perfect example of where you kind of used Wefunder for like a component of the raise. But how did you structure it and kind of approach it kind of from a process and timing perspective, Jay?
No, Daniel, one of the things that you can do on Wefunder, which is cool, is that because we raised on the same terms, like our safe note on Wefunder was the same safe note that we were sending to private investors, we're able to sort of pool that goal together on Wefunder. And like if you're on that screenshot, if you like hover over the number, it'll say what the breakdown is, right? And so even if you're raising off of Wefunder, it'll sort of go towards your Wefunder goal because that's your fundraising goal in general. So that's good. I also wanted to talk about, because I know a lot of when I've had conversations with people who are asking me about my experience with Wefunder, most founders are really interested in literally like, how did you do it? Like, what were the technical, like, how did you market? Was it hard? Did it take up a lot of time? And so I would love to talk about that if that's kosher.
I'm going to drop a link in the chat as well with a fundraising guide we put together. But that would be awesome. James, go ahead.
I was going to start with that link because that link is like literally just the handbook for how you should I think it's learn.wefunder.com, or did you change it?
I don't know where learn takes us.
Well, I mean, it's one of those anyways. But it's basically like the handbook for how to successfully raise a round. And it talks about breaking down your layers of communication all the way from thinking about pre-launch to post-launch to the first few weeks of your campaign, the middle, which kind of is like no man's land, and the end. We got probably 80 to 90% of our entire round in the first 2 weeks and the final week. And we were live for about 2 months. I saw somebody ask, is there a time limit? I don't think there is actually a time limit. You can have a campaign open for quite a long time.
Correct.
But we got almost no investments in sort of that middle month period. We had a few like conversations with VC or small angels and then directed them towards Wefunder. But most of our marketing communication happened before we launched, right when we launched, like heavy, like one email a day, one text a day, one social media post a day. And then at the very end, like really pushing FOMO. So what we did was first break down audiences into concentric circles, like I talked about, like who's the most likely, and then who has never heard of Jibby, and break down communication in order of those. And then we broke down communication by channel. So you've got Instagram, you have your email list, you have SMS, you have TikTok, you have LinkedIn, you have Slack channels if you're in any group me channels. Like just break down every single channel that you have to communicate to people. And then the third sort of thing that we broke down was what is sort of the message in each point, and how does that paint an overall picture? So like, for example, before we launched, we already knew we were going to do Wefunder, but before we launched, we said to our audience, like, hey, we're thinking about doing a community round, right? Like, can we count you guys in? Basically, a really short founder email like that. And, not like thousands of people are responding and be like, yeah, you should do it, let's go. But a good amount of people said, yeah, that would be really cool. And then, the next day or 48 hours later, the next email was like, we had so many people say, yes, we want you to do a community round. And so that was our next bit of communication to people. So like really trying to build this story of like momentum and groundswell even before launch was super important. And then when we launched, we could say like, it's go time, or even it's like 24 hours to go time, 10 hours to go time, then it's go time. And we got a lot of money in the beginning just because of that, and like thinking about how we can break down the communication.
So then, James, just a quick question on when you started getting those emails from people like, actually, yeah, I'm interested. Do you see any commonalities in who those kind of people are? Like, are they all people that like you kind of knew before and they became fans of the brand, or these are random people? Like, could you say like, yeah, this is that kind? It's like, anything that you could demographic wise or location wise or income wise that you're like seeing, oh yeah, it makes sense. They're from this group that's probably going to invest.
It was definitely a huge amount of subscribing customers. Like it was people's names who I recognized, whose orders I packed a million times when we were self-fulfilling. So like people who I had never heard of, who I had never spoken to, like, like a customer who had been like a 10-month subscriber put in like a $10,000 check, and I had never spoken to this person. Like, that's crazy. That's really cool. There were a good amount of people who I knew, but I would say that that was the minority of our like overall investors. And I think Jonny's kind of ratio is pretty accurate. I think we raised like 60% from our community and maybe 40 or a little under 40 from Wefunder, like people who weren't customers and I had never spoken to, and etc.
It was actually 65% from first time investors on Wefunder and 35% from existing Wefunder investors. So yeah,
From
came in a little bit over the 70-30 split I mentioned before.
Cool. That's great. Another thing that I wanted to mention is like like you put this in the beginning of your slides, Jonny, like a lot of the Wefunder launch and campaign is a marketing campaign just as much as it is a fundraising campaign. And if you follow a lot of the same principles as like a product launch, which are like, we're going to pre-hype our audience, we're going to tease it, then boom, we're going to have a big splashy launch and then kind of follow up on educational things right after that. That was really what it was. And I think the context of like, we are marketing this campaign to our consumers and to our community is an important way to think about it. And like, here's a really good example of that, actually. I had sent like, I think it was on like my 7th email. I sent my 7th email and I noticed that my mom invested. She put in like $1,000 and I was really excited, obviously. But I asked her, like, I'm just curious, like, why did you invest on email number 7 and not like when we launched? And her answer was just genuinely because like she meant to every single time, but she's getting emails. She's a busy person. And like, it just was always the wrong time and wrong place. And then she clicked one of them and it was the right time and the right place. And I think a lot of founders are like afraid to annoy people, which is valid. But you got to be a little bit annoying to pull something like this, like to like really do it. And there's that rule of 7, like somebody has to hear something or see something 7 times.
I was just going to say, your mom's answer to that question was like, well, I don't know if you heard, James, but there's a rule that people don't do anything until the 7th touch point. Just to build on what you said on the marketing campaign, one specific, I don't know if you did this, but one specific tactic that I love is like a fireside chat where you like invite a bunch of people to a webinar, can be digital, can be in person as well. Like you're the star of the show, you're the founder, like talking about the journey and like your background and why you started the company, the pain point that you felt and the vision you had, and then the journey so far. And like that, it's kind of like it's marketing the Wefunder community around, and hopefully people that by the end of that hour they're like, man, this guy's awesome, where do I invest? But it's also just unbelievable kind of excuse or opportunity to like really like bring people into the brand narrative and your personal narrative as a founder. Obviously, like CPG companies, like the personal founder brand is like very intertwined with the company brand. Did you do any of that at all?
Despite being on this webinar, I really don't like being on camera and talking. So like I was like embarrassed to do these like Instagram lives, and I saw a lot of other people do those for successful campaigns. I never did that, but I did do certain emails that went out after like customer second order or something that was like, hey, by the way, we're raising. If you want to chat, here's a link to my calendar for a 10-15 minute convo. I can't say that I had like hundreds of those, but we had maybe a dozen or 2 dozen of just like random person that decided to take that call because they were interested in learning more. Another thing, this is like just more of a small tip that I remember being weirdly successful was an email that was kind of like a filler email that we sent out that wasn't really like asking or pushing anybody to raise, like, because I see a comment in here like I feel icky asking people for money. I totally agree. It feels weird when you're like give us money, we're raising, blah blah blah. But one of the more successful emails was actually just like a FAQ about Wefunder, like what is Wefunder, is it safe, how does it work? And it was just like a little FAQ that was built off of an FAQ from Wefunder. And the lesson learned from there was like, think about kind of all the reasons that somebody might not want to join or might not want to invest, but like they're interested. And one of them might just be like, they know Jibby and they love our brand and are interested, but what the hell is Wefunder? Or I've never invested in anything before. And so also consider that in your communication. Like if you're raising, like you already know a lot about Wefunder because like you're on it, but make sure that your customers know what the hell it is too.
One other super specific tip is text messages. I don't know if you did this, James, but like multiple founders have sworn that like sending SMS messages, Wefunder is like very, very good on mobile, like beautiful, like Apple Pay checkout is, you know, Google login, Apple Pay checkout, super easy. And, you know, folks have told me they've raised like hundreds of thousands of dollars by sending a bunch of text messages. I remember when I liked your analogy to like the product launch. Wefunder launched this kind of newsletter. We have Founder Secrets on Product Hunt last year. And for the last 2 or 3 hours of the race on Product Hunt, I was sitting in my bed, like texting. I texted 250 people on my phone. And it's like, if I was launching a Wefunder, I would like do the same thing, just replace like we're launching on Product Hunt with like, hey, check it out. We're running a community round.
And I think people can really tell when they're being like mass marketed to versus like something that is more individual.
100%.
And I did the same thing. I don't like, and I think what you're saying is not like go to Klaviyo and do your SMS list. Like I literally texted
100%.
as many people as I knew individually.
I'm not smart enough to do Klaviyo, so for me it had to be one-on-one.
And in fact, actually, like I noticed that we did. Sorry, I just dropped my AirPod. You kind of have like a bunch of different ways to talk to consumers, and like one way to talk to consumers is from Jibby the brand, but another way to talk to consumers is from James the founder. And so like I would send a lot of plain text emails that were like
100%.
Hey, it's me, I'm the founder, and here's our story. And then I would send more like flashy or branded emails that are from Jibby. And this just gives you like more ways to connect and more ways to connect intimately with your consumer base.
Yeah, love it. Any other kind of, go ahead, Daniel.
Oh yeah, I just wanted to ask one question that was coming in through the chat from Absynthia is around, I think like female or underrepresented groups representation. So do you have any data around like, hey, we know this disgusting data point about how only 2% of funds raised through VC go to female entrepreneurs. I know you said this is a better platform for underrepresented groups, people don't have that same access, which I love. And honestly, there's nothing that makes me more annoyed than when a VC requires their email address to connect with them on LinkedIn. I'm like, oh, okay, you only want to connect with people who are like your network. I get it. So I assume this is already better, but do you have any anecdotes or data points around, what percent of the people raising are female or underrepresented groups? And also, what about the investors? Are you seeing more of the investors like, are like female founded brands killing it with female, with female investors, or what do you see?
Yeah, good kind of some progress on both sides of the marketplace, the founder side and the investor side. Not like it's not like 50% of investors on Wefunder are women, but yeah, we don't have perfect data. We don't ask either investors or founders for ethnicity or gender data, so we don't have great data. But from a kind of qualitative kind of sample-based approach on the founder side that we did a couple of years ago, 20% of capital was going to female founders, so way better than the 2% stat that you mentioned that I know. And I think if you were to cut it by ethnicity as well, you'd see kind of significant improvement in terms of like the amount of capital going to founders. And then on the investor side, 70% of investors on Wefunder are men, 30% women, which obviously is not 50-50. But if you look at angel investors, I think it's 85-15 men to women. So again, like kind of positive movement in the right direction. Would still love it if we could get closer to parity. But I think on both the founder side and the investor side, like some progress for sure. And again, Wefunder, if you read our public benefit corporation charter, like in that charter, we talk about expanding access to capital for underrepresented founders.
Great. Okay, cool. So, well, I think we're just about wrapping up here. I think we got through pretty much all the questions. Somebody asked for a reminder on the fees. So I think typically Wefunder's model is that for all the amount of money that you raise through Wefunder, you would typically be taking 7.9%. If you use the startup CPG link that I'll post again here now, then it's 6.9%. So not free,
Correct.
but at least that'll save you a little bit of money.
Also on fees, I think it's important because I think people also wonder like how much does it cost to actually like just set it up, like do a campaign. And the answer is if you can do the deck and the story page yourself and you're comfortable doing the reach out and sending the emails, then it's free. Like there was nothing else other than your time. And it was a lot of time. Like it takes work to put in these things and prep these things. But we also were able to like do a lot of our emails and planning ahead of time so that we weren't scrambling to do them live. And by following the guides thing that Jonny posted, like we're able to get that all done right, like a big chunk of it before we even launched.
One other kind of question on the fees, and again, this is nuanced, but James, how much do you spend on like paid ads and paid marketing for the race?
We did none, at one because we were recommended kind of not to, and two because we were only selling CBD at the time, and you just can't run anything that talks about CBD. So
that's because Daniel, you mentioned like paid ads before, and that's I think one thing that differentiates Wefunder from our competitors. Like we don't really love paid ads as a way to raise money. I think like it's already the 6.9% fee. What you typically find in ROAS, return on ad spend, is like 4 to 1, something like that, 5 to 1. So if you're spending 25 cents in ads to raise $1 of capital plus the Wefunder fee on top of that, that just becomes a pretty expensive way to raise capital. For me, like if your customer LTV is really high, and so you're spending ad dollars and you're raising capital and recruiting customers, then actually it can start to make economic sense. But just to say, like I think because with Kickstarter, I think people are often spending ton of money on marketing. Like with Wefunder, it can work, and we'll talk to you. And that's another thing we haven't touched on. Like our team, we want to be supporting and advising, like guiding, consulting with anyone working through our process. But one of those things we'll talk you through is like, okay, does it make sense to spend any money on marketing paid ads here? And usually the answer is no.
Got it. Makes sense. And are there ways that you can get cool features, as you know, if you're like doing well, is Wefunder going to throw it up front and center on the homepage that maybe gives you a little bit of a boost, or you know, that like percent that you get from the people who aren't really your people? How does
we have a rule where the first 50K is on you. So we're not going to even list you publicly on the Wefunder list of companies, email you out to our guys until you get 50K. Once you hit 50K, then you can, at any point, you can choose, okay, we want to go public. Again, usually I recommend actually don't just go public as soon as you hit 50K, raise as much as you can first, then you make a stronger first impression with our user base. But then there are various milestones, like once you pass 50K, 100K, 250K, 500K, we do basically different marketing activities that will give you more real estate and more kind of eyeballs on the Wefunder investor base. And so that 70-30 ratio I mentioned earlier, again, that varies company by company, but whether it's a 200K raise or a $2 million raise, the average remains pretty constant 70-30, because basically the more money you're raising, the more exposure you're getting to the Wefunder audience. And yeah, we follow those rules pretty rigidly. We're kind of regulated by FINRA, so we can't give kind of special treatment to this company over others.
Makes sense. Okay, so just a reminder to everybody, I pasted the link that we have, which saves you on fees, in the chat here. I also, without asking, gave Jonny's email address. And if you email him, I would just mention Startup CPG. So again, you can get coded in with that discount. It's Jonny, Jonny, at wefunder.com. Probably his assistant will respond. Her name is Joni, which is a little confusing, but it works. And just, yeah, thank you guys, everybody, for listening in. This was really interesting for me. Obviously, I was learning alongside all of you. And thank you, James, for bringing the brand perspective.
And hit me up on Slack if you want to talk, even just like 15-minute chat. I'm happy to share my experience a little bit more in depth.
All right. Any other closing words? All right.
Invest in companies on Wefunder. Don't just raise capital for your startup, but become an angel investor. $100. Invest in a cool company like Jibby. Take you 2 minutes. $100. Be an angel investor.
Woohoo! All right. Cool. All right. Thanks, everybody.
Thank you, guys.
Yes, guys.
Thanks, Jonny. Thanks, Daniel. Bye.
Bye.